My guest today is Sam Mahmood, co-founder of Pave, a holding company rolling up businesses in the paving and line striping space. Today, the portfolio, three businesses, generating 66 million in revenue and 7 million in EBITDA. Thanks a lot for coming to the Holdco Builders podcast, Sam.
Nick, it's an honor, man. Appreciate you having me on.
I want to start with your journey well before paving, before roll-ups, funds, and deals. What were the early experiences, mentors, or lessons that shaped your mindset as an operator and investor?
I think I'm a true sales and marketing guy at the intersection of, paving today, where I'm masquerading myself in private equity. I think I really realized, Mick, that I can go and talk to interesting people and get them to want to work with me. And I said, how can I go lever that skill set to its highest ability? And when I first started my career in the medical device space, I learned I can go talk to very echelon individuals, which are surgeons, to want to work with my company when I started when I was at the age of 25. Shortly thereafter, I said, let's go build something a lot bigger than just being a sales rep today. So I started manufacturing surgical instrumentation, getting involved with large GPOs, which is group purchasing organizations of hospitals. And said, how do I continually go and expand my skill set by talking to larger key decision makers? And then that's what's really influenced me to start in this private equity world, saying, knowing how to go craft a story and a narrative and sell to individuals is an art of its own. How do I go maximize that in the biggest opportunity? And now I've landed that on paving thus far.
Okay, let's cover a little bit before the paving part, medical instruments, and how was this journey for you? And did you exit it already, or you're working on this, or what's going on?
Started the business when I was 24 years old. Before that, I was an aspiring footballer, played soccer my entire life, realized I was not going to be Cristiano Ronaldo, went to Sweden, played a little bit over there, and had a couple injuries. Came back and I had a sports agent who told me, hey, I have a former rep who got in the medical device space. You should go talk to him. So I talked to him, got in the space, and shortly I realized that this is an industry that has a lot of lucrative aspects to it. And I figured out how to go start a distribution business out of that and later learn how to go manufacture medical devices. There's a very quick understanding of learning how to go scale in an industry I didn't have much experience in. So over the last 7-8 years, built that company to a national scale, took some chips off the table about 2 years ago and still own that company today. It's operated completely without me. And that's where I had the inflection point to say, what can I go do now, right? I built one company as an operator for the last, let's say, 8 to 9 years. How do I go and translate that into an industry that I feel has a lot of upside, potentially fragmented, and I can use my skill sets to the highest opportunity? And I landed in the roll-up space of paving.
And what is the story behind that? Because you said that you did what is the right way, a research on which type of industry you should go for, what has these tailwinds, what was the process there? Because there are so many different ways and so many different industries to pursue. Why paving?
Yeah, it's a really good question, right? I spent a Hard Knocks MBA understanding where I really wanted to go pursue my endeavors. And I look at it in a few different ways. Is the first thing I looked at where things are a little bit unprecedented today, and I want to see where's an economic uplift. And what I noticed in paving was that there was about $350 billion entering the marketplace from the $2 trillion that was being put in from the Bipartisan Act. And I thought that was quite compelling. And then I saw all these baby boomers that had no succession plans as well. You hear that in a lot of different service industries. But paving specifically, when I look at this, Mick, I'm like, many guys in their early 30s are not entering the paving space whatsoever. And then lastly, I saw an influx of these self-driving cars entering the marketplace as well. And full self-driving is becoming very prevalent today in society. So I said, how do I go combine a thesis around that? So that was the initial early, tailwinds I saw in paving that, other industries didn't really complement as well. You look at plumbing, you look at HVAC, they're very mature sectors now that have been established in the roll-up sector. And then the other things I started to look at as well is where can I go use my skill sets? Where can I go be a domain expert and have the highest leverage of what I'm really good at, right? And like I said earlier in this pod is I'm truly just a sales marketing relationships guy masquerading myself from private equity. So I started looking at a couple things when I started my medical device company. I always start a business is, can I go create infinite demand? What industry can I go here, create infinite demand in and have a very good guarantee that can complement that? And I said, look, I don't see anything very substantial today in paving that has really strong operational efficiencies and those unique moats that are separating one company from the others. So how can I go build that today in a very unsexy industry by creating a very unique brand? And I kind of compile that thesis together under the premise that I think roads are going to be exponentially valuable for the future because of all the economic uplifts today. And now we've landed on paving and, we've created a lot of tailwinds in this industry thus far.
Guys, the business ownership journey is very lonely, and I've partnered with ScalePath to solve that problem. ScalePath has a network of over 2,000 business owners across the US and Europe. And if you book a call with the CEO, Rand Larson, today, he will introduce you to up to 3 business owners in your area. So again, go to joinscalepath.com and book a call with the CEO, Rand Larson, to get to know the 3 business owners in your area. Now, back to the show. I'm just trying to understand a bit of this thesis development and maybe when it comes to this industry selection, because there is a lesson there. Many people are in a similar position. Maybe they sold the business, maybe they have a bit of liquidity. They would like to do something next. So what were the first 10 hours of research like when you started considering paving? Like who did you call? What did you read? What did you consume? And how did it all happen?
I'll tell you the first wild inflection point, which I think you might have heard the story that really got me going around paving. I was actually sitting on my porch on like a Friday at 4 p.m. and I was reading Elon Musk's biography by Walter Isaacson. And this book was quite fascinating, but there's a really unique point in the book that just caught my attention where Elon was talking about a certain turn where the self-driving car was not performing. And I realized, and he realized that it wasn't the car itself, it was the line striping and the roads themselves that was causing the car not to perform. I was like, interesting. So Elon was audacious enough to say, go repave and re-line stripe the roads. And that happened. And then shortly thereafter, once that was done, the car performed well. And after that, I realized, I was like, wow, line striping and roads are going to be exponentially valuable for the future. And that's where all the diligence started happening therefore after. I put the book down right away. I went on my computer. I started understanding paving, what's going on in the roads and infrastructure sector, what had been passed in 2022 by the Joe Biden administration, and started forming a thesis around that. And I shortly started calling all my network and saying, hey, who knows a paving owner? Who knows paving industries today? And it's more of a who, not how approach, right? Oftentimes, if you're going into this thesis and you're a search funder, an independent sponsor, and you're trying to go figure out, where you want to go indulge your skill sets in, or an industry that you want to go dive 2 inches wide and 10 feet deep in, it's always a hoop, right? Who can you go call rather than how you're going to go do it? And I was fortunate enough to find, one of the biggest paving industry operators in the country and had a conversation with him, which then later that formed him to become a large advisor for us who's very well versed in our business today, and just started having an hour-and-a-half conversation with him about the business. And I was fortunate enough to really go and find someone who, built a $400 million business to have an hour-and-a-half conversation with me about the industry and what I was going to go do. And I think that's the art of storytelling that's really compelling that many search funders and independent sponsors want to go create, because your advisory board, which we'll get into in a little bit, is probably one of the most important things you want to go build before even, diving into your thesis.
Is this the same guy you tweeted about, that if you built and sold a 9-figure company, would you diversify or do it all over again? And you said that on Monday, I'm meeting with a gentleman who built a paving business to 500 million in revenue in 10 years and sold it for 900 million. Not once, but twice. Is this the same guy?
It's a different guy, actually. So lightning strikes twice sometimes, right? And I've been fortunate enough to meet a lot of the biggest players in this space. And it's just led a domino effect to go find really good people. So, now I built a board that has over almost $1 billion of revenue behind us. And I call this building the Mount Rushmore of the industry. And I think, I learned this from Justin Ishbia, actually, who runs Score Capital. He's probably the GOAT of the industry, I would call him. And he builds like a 7-person advisory board before even diving into a thesis. And the rationale for this, I think, is that if you have the best people in the industry guiding you on where to go seek your next investment, it's hard to fail, right? And, you always want to have a Pepsi and Coca-Cola perspective as well, which means that if I'm going to go have someone who's in commercial recurring paving, that's the Pepsi. And then if I want someone in the government municipal DOT space, that's the Coca-Cola, right? And I kind of built that around my board today. knowing that I have really good perspectives from both different parties who have created mastery in this industry. And I think that's what I would advise everyone to go do today as well.
Okay, you found paving. Was it the first one, or which industries maybe did not pass your filter and why? Or was there any failures when it comes to spending lots of time doing lots of research, maybe meeting similar type of people in the industry, and then you found out, oh, okay, this is not good enough. I have to go and look something better.
Yeah, it's a good point. As I was doing my research, I saw a lot of industries that have increase in entry multiples today, and just because business acquisitions have inherently become a lot more popular. So what I'm trying to go figure out is where I can go create the largest arbitrage. And initially I looked at, large infrastructure construction, just for the mere fact that I think construction is an industry that is AI proof and resilient and will always be in demand. But that was so heavy CapEx, it's hard to control that. And I said, how do I go create mastery in just one area out of that? Before that, I spent 6 months looking at even the landscapings, the HVACs, the plumbings. But I felt like if I was just another landscaping, HVAC, plumbing roll up, I really wouldn't separate myself from the rest. I just know so many people in those sectors. Nothing against that, but I felt like it just wasn't the one for me. One that I got pretty deep on that was out of this construction sector was EdTech. Had a massive interest in that space. Was under LOI with a company that I thought was going to be a home run. And then realize, that also wasn't the industry for me for various reasons we can dive into. So I think part of your diligence when you're doing, an industry research of where you want to go create, your investment commandments first, and then go find your industry second. So I actually started listing out 10 commandments of what I'm looking for in an industry, and then finding a business that fits that. Because ultimately what you're trying to go do is you want something that fits to something that aligns with your values of what kind of business you want to go buy. And ultimately paving just landed on that, just for the mere fact that I felt it was overlooked. And again, I don't wake up and, love breeds talking to tobacco chewing, cigarette smoking contractors all day that love and smell asphalt. That's just not my MO. But what I do love is finding offline, digital, fragmented industries that I can go create arbitrage in. And I think that's, why I fell in love with this sector today, and why I've created a good brand around this, and why I want to continue being known as the guy who's buying paving companies, as it stands out. And that's ultimately what we want to go do. You can call it somewhat of a zig to zag approach, where a lot of people maybe are looking at the HVAC sector. But if I'm seeing, HVAC companies today at, $700,000 of EBITDA trading for 5.5 times, how will you go create something we call a MOIC in private equity, a multiple on invested capital, to investors, where you can go create that on the back end, will be quite challenging, right? And in paving today, our entry multiples are blended about 3.5 times. So as you mentioned, where we're turning the corner on around almost $66 million of revenue and 7 of EBITDA, to be at 3.5 times, we can create a lot of multiple expansion on the back end now. And that's what's drawing a lot of unique capital partners that we want to go partner with for the future.
Before talking about the portfolio and the acquisitions, you said the first step for you, once you found the thing to focus on, the industry to focus on, was the advisory board. How do you, these are all very high caliber people. You said the revenue sum is 1 billion of their experience and all that. You mentioned it before. How do you sell this idea? Because you're in your early 30s. Yes, you have a background, but they're busy man. They're, I guess, a bit older. They have their families and all that. So how do you do all this? And what are their expectations when it comes to all this and the timeline maybe? Hi friends, Brandon and Spacebar Studios are my go-to team for demand generation. They are offering a special offer to Holdco Builders followers, a free 90-day growth roadmap for your business. Get 2 to 3 concrete steps you can take today to grow your demand generation engine. Head over to spacebarstudios.co to claim your growth roadmap, as there's limited availability. First come, first served. Now, back to the show.
It's a really good question. So there's a couple things that I can control, Mick, and there's a couple things that I cannot control, right? When I go about crafting an advisory board and creating a narrative out of this, right? And I would say that there's 2 things I can control, which is the people I bring on and the opportunity that I cultivate. And the outcome is something I cannot control today, right? But I know if I really focus on the controlled variables, the outcome should be quite promising. So as I'm creating a narrative and I'm storytelling what I'm looking to go do by rolling up multiple paving companies, getting to potentially $75 to $80 million of EBITDA, and some getting this to almost $1 billion of revenue, that should gravitate A caliber individuals to want to join the journey. So that's the first thing. Like, you're telling them your story. Then it's about them meeting you, your energy, how you actually craft your story, what's your background, and what you've done thus far. And people can feel that from just a Zoom call or in-person meeting, right? When you can go put those things together, I think you can really go attract almost anyone, right? If you have the right opportunity and you have the contagious energy that people want. And I think like those are two things I just really focused on, showing that I can go create something massive that's worth their time. And in a short period of time, we've only been doing this for about 11 months now, and we've created a lot of enterprise value from being able to do that. And asking someone to go take a risk on us where there's minimal downside for them is always the goal, is always what you're trying to go portray as well, with a lot of upside, right? Again, as an advisory board, there's multiple ways you can go compensate them. To your second question, sometimes you can do a cash compensation, or it's a piece of, equity in the company that vests over the next 4 or 5 years, right? I chose the equity version as, cash was a very preserved currency for us in the early starts of our company, because we want to preserve the cash that we have and we want them to have skin in the game. And, shortly thereafter, these advisors have shown interest to wanting to invest in our company as well, from seeing what we've done thus far. And we put our money where our mouth is as well. We said, look, just watch us go to work, watch us, learn how we go raise capital with institutional investors. And they sat on these calls and they had little like sneak peeks of what we're doing. And they started believing in us, right? And I think it's all about you showing that you can actually talk the talk and walk the walk. And you'll only have a couple opportunities to go give that to really good advisors who generate hundreds of millions of dollars. And if they're going to go invest their time and efforts into you, you want to make sure you're making a really good impression in all the actions that you're doing, because private equity is a sales and psychology game coupled with chess and a puzzle. And if you know how to go play that well, you can go attract whoever you want.
So now we have the opportunity, the thesis, the advisory board, and you mentioned raising capital. Who do you choose to raise capital from when you started? And how was this process? And maybe giving us the timeline as well of how long it took to you, and maybe how many frogs did you have to kiss, and how did it work out?
Wow, what a question we can unpack, right? So a lot of people, when they're an independent sponsor or starting out as a holding company, they have a pitch deck and a dream. And I think Thomas Edison once said that vision without execution is just hallucination. And I learned that you want to go out there and create a MVP as fast as possible. You can talk about what you're doing, but if you can't go out there and get a couple $1,000,000 from your friends and family, you really haven't proven out your thesis. So I went out and raised retail capital to start. And for anyone that wants to go do this, raising retail capital is literally like knowing what people think of you when you die, because they're going to show up to your funeral or not, right? And that was my first time really putting my hand out to retail investors, which is friends, families, doctors, attorneys, people in my network. And we were fortunate enough in the first 30 days to go raise about $2.5 million, right? And that $2.5 million allowed us to go buy our first company. And then we started creating a lot of webinars, a lot of traction, and we had a lot of people just loving the thesis that we were doing. I started building the brand and building this in public as well via LinkedIn, and just catching a lot of attention. Shortly thereafter, in about a 4-month period, we raised about almost $7 million thus far, all from retail investors. And then I think that is like a perfect inflection point now to say, okay, we've created this economy of scale from a lower class investment pool, you can call them, which is retail investors that sit on the bottom of the totem pole. And then now we've attracted a lot more family offices, PE firms who want to start and invest in the Pave today. But, you can go one of two ways. I'm not saying the way I went about is the correct way. It's just the way that you have a lot more control to start. It's non-dilutive capital as well. First, if you're going to go raise from large institutions to start, just know that they're going to control your board. They're going to dilute you from the get-go, and that's something to consider as well.
Okay, any war stories? I mean, raising $2.5 million in 30 days. How were the numbers? What was the reaction? You mentioned you went back to your old colleagues, I don't know, customers, but I mean, like, paving is very different, very dirty compared to what you were doing before.
Yeah, great question. So a lot of the bottlenecks that I got was, Sam, you're not a paving guy at all. Like, I think you're a great entrepreneur, but you're not the guy that can go and, operate a paving machine if things go to shit, right? I had to go pay down, those objections by having really good people around me. And that's what happened when I started building the advisory board. They started meeting, the paving experts on our team. We started showing that we're buying good companies with really good managerial experience as well. And in the early discussions, I started bringing on a lot of the paving experts to help us cultivate the thesis that brought a lot of trust to the investors who want to go invest in the sector. I think everyone was sold that the sector was good. The second part about it is you have to understand is us, the people, are we the ones that can go execute this? And, my partner, Chris, has a somewhat of a construction background. I've done several residential flips throughout my life back in the day, but we're no paving experts, right? And if you put me in a Home Depot today, I probably couldn't find a shovel. But regardless, I think what I can go do is attract the best people in the industry who are paving experts and show that to my investors. And that's what got them over the hump.
Okay, we have the advisory board in place. What about the partners and operators? It's Sam, you, Chris, Sam Silverman, and Sean Goodwin. How did it all work out? When did they came on board, and how was all that then?
Yeah, Chris was my first partner where, he was into more of a venture play that he was doing before, and I realized, his skill sets was the yin and yang partnership that I was looking for. He sits in the complete opposite part of the brain that I don't have, where he's a great deal structure guy. He loves the spreadsheets, like being behind the scenes. And I'm more offense oriented, right? I can go raise the capital. I can go talk to the investors. I can go be the visionary of the company. I can put a sales and marketing process around these businesses to help amplify growth. And he was the first guy I really recruited to go be my partner in this. We brought Sam on to help us some of the retail capital raise, and he's been able to help with that. And then now we brought on, a lot more people as we're raising more capital around corporate development, VP of revenues. And now we're building out the entire infrastructure of how we want to go, grow the Pave to a very large entity. So initially when we started, we're just a very lean organization with, 4 people, an advisor and 3 guys going and doing this. And then now that we're hitting a level of critical mass, it's really about what happens in post-integration, what happens about implementing the ERP and tech systems into these companies, who's doing the M&A. There's so many facets to this now that, we caught us by surprise that we really need good human capital to make sure we're building a really good company. And now my sole fiduciary obligation is hiring the best people around me. And one of the coolest parts about my job ever is I have a blank canvas, which is, a lot more blank than the whiteboard behind me, where I can go pick the best people to come on this journey with me today. And if I give anyone advice in life, the opportunity to go do that, I actually get the chills just saying this. It's the most rewarding thing ever to go pick and choose the best talent to go with you on a journey that is so hard, yet so rewarding on the other side, right? When you know that you have the right people on your team.
Okay, this is super awesome that you brought it out. So what is the first approach, or how do you get the meeting, or how do you do that? Because the best people, they are not on job boards, like looking for opportunities. They're doing something.
Yeah, it's a very good point. I think the biggest misconception about finding talent is your network. I've been fortunate enough to be part of, now Hampton, and now I'm going into YPO, and these organizations where you're just attracting really high caliber individuals who know a lot of other high caliber individuals. And there's a theory around marketing, right? Which is, what's the best form of marketing? It's warm referrals, right? So if you know how to go get warm referrals in every aspect of your business to go generate leads or generate high quality talent, that is the first source that you really want to go and dive deep into. And that's where a lot of talent has seeked me. Part of the reason too is, like, I know you have a large brand on Twitter. I've somewhat built that on LinkedIn as well, and had a lot of really good talent come in through my DMs. And that's part of somewhat building the personal brand why I share in public, right? Is that you start attracting people who are really embedded into the story that you're building today. And I found some really good talent through that as well. We had a couple of recruiters along the way and so forth, but having a warm introduction from someone that is well trusted is always the best way to go about recruiting the best talent.
Now, when it comes to the first deal, how did you find it? How it all came together? You were putting together a team, you were raising capital, you were looking for first business. How many companies did you look at? How did it all happen? And how large was the first one?
Yeah. So when you're first getting going, you're playing multiple different roles. You're raising capital, you're doing the M&A, you're finding deals. It's very hard. And I was fortunate enough to go find a company in Arizona called D&O Contractors that was always doing around about $12 million of revenue and about $1.5 million or $1.6 million of EBITDA. We structured just a really unique deal in the sense that we bought the business for a little over $2 million to start, with a heavy seller earnout to assuring that the business will go hit $1.7 million the next year. So, we bought the business for a total of $6.5 million of enterprise value. So $1.5 million seller carry, $2 million at close, and then a $3 million earnout, assuring that he hits $1.7 million of EBITDA over the next 24 months. So he has 24 months to go do that on a TTM basis. And we structure this deal for the mere fact that it always mitigates our downsides for our LPs and us, assuring that the owner is aligned and they stay on with us, ensuring that they have skin in the game, right? And we kind of created a buy box around this. And you get this in paving rather than in a tech company where the owner is not just go sail away on the sunset and become a millionaire right away. They know they have to make sure they're vested in the business, assuring that the team's going to stay in place. So we've turned that business around and have grown it substantially since. What I've learned about paving, and another reason why I love the sector so much, of where I see the upside, is a lot of these owners are really good contractors. They're not good businessmen. And you have to understand how to bifurcate those two when talking to an owner. What I found is that they were able to go get a bunch of business just through their good old paving buddies, but they had zero sales process. I'm like, wow, if you can go generate tens of millions of dollars without having a sales process, imagine if you actually understood how many times you're estimating per month, how many outreaches you did in the last 60 days, and actually build a system around that, right? And that's what we started doing, right? And now we hold proper KPIs around this, and everybody's monitoring like what they're actually doing. And when we go win a bid or win a job, we're all winning, right? They all get a bonus every time we close a deal. So I think that's now where we've embedded a really good culture into this business. So I think that the company is going to be a very big company over the next couple of years by just adding a couple tweaks into the first business that we acquired.
Your partner Chris was in a podcast and I was listening to this, and he also mentioned that you had one company under contract in the New York metro area, but you decided to not move forward, or what happened? Tell us.
We flew to New York, looked at a company out there. And one thing about New York, and people from New York will know this, is that you have to have like a really good edge in New York in order to be a really good operator there. And us being here in the West Coast, we're like, do we want to go be in an area where we can go create a competitive advantage, right? If you're going to go into any business today, the first thing you think about is, where's my edge? How can I go be better than the next guy next to me? And I didn't feel that at all in having a company in New York, but I knew in Arizona and having density in the Southwest specifically, where we're all geographically located, we had an opportunity to go really create an edge in what we're building today. So we went and bought a company in Arizona instead. We said we don't want to go work in New York just for the mere fact there's weather conditions that are not in our favor. And then I created this thesis, and I had to go to New York and see what a bad company looks like. I understood what a good company looks like. And I think everyone needs to go through that process of signing LOIs, going under diligence, seeing if it's a bad company after 75 days, and then coming out the other side is like, oh wow, that was a great education, learning experience, knowing that I now know what a really good company potentially looks like. And that's what we probably made the best decision of our life to not go buy that company, as we were under LOI for a long time and then, deviated from that. And when I look at where I want to go create density and I want to go sell this entire portfolio, let's say in 5 years, you have to put it on a vision board for you, right, Mick? And say, what do investors want? It's not what you and I want today. It's what does a middle market PE firm or what does a strategic buyer want? I think that we're going to want areas that you can go work 365 days out of the year, that are very business friendly, that you can go have a lot of influx of demand of economic growth and multifamily growth as well in those geographic sectors. That creates a compelling story on the exit side. And I think that's what, now we're buying mainly in Arizona and Texas and Florida for those reasons.
Were there any surprises when it comes to the first acquisition for you? You don't have the industry. Yes, you have all the people around you, but at the end of the day, you have your thoughts and ideas and your experience. How was it personally for you once the first deal was closed and maybe the first 90 days?
I think people underestimate, the business acquisition strategy. I think there's a lot of guys on Twitter, LinkedIn, Instagram who talk about how easy this is. I've done some really hard shit in my life, and acquiring companies is definitely the hardest thing I've ever done in my entire life. So let me just put that as a notion. And if anyone tells you this is easy and you can do it as a W-2 and buy a business, they probably haven't bought a business. And just a couple of surprises from the get-go that will just shock you, right? Just think about the bank accounts right from the get-go. Like how's that managed? Does the owner still, have access to the bank account or not, right? He was withdrawing some funds still post-acquisition, and we were wondering why he was doing so, because he thought he was owed some of the AR still. Little things like that can catch you off guard because you're doing 200 diligence items to make sure the business is operating correctly. And post-acquisition, there's just so many things that come into play. The employment agreements, you have to go do all these new employment agreements with everyone, assuring that they're aligned with the new entity. The LLCs and the corporate structure as well, putting that under your umbrella. There's so many facets to what happens the first 90 days that you don't think about pre-acquisition at all, because you're so focused on the deal and, excited about the endorphins that are happening in your body. But at the first 90 days, there's so much that goes into it that can really catch you off guard. And you don't know what you don't know until you're actually doing it. So I think the key thing that you really want to prep for is the culture, I would say. The culture is everything, because when an owner sells a company, that is something just that's massively a change for the entire organization. And I think the thing that we underestimate the most is that you're not buying just a company, you're buying 50 new employees and with no trust. And I'm this young guy coming into this company, and they're like, you're not the paving guy that I've been working with for the last 30 years. Who are you? So initially you have a guard up against you no matter what, because when you're buying a business anyways, you don't get to meet the entire team until potentially the very end. And you don't even get to meet all the team. You get to meet maybe one or two key employees. So overcoming all the new employees and knowing that this is going to be a positive uplift was definitely a challenge to start. But I think I spent a lot of time really building trust. And I think that's what I advise everyone to go do when you're going acquiring a company, is knowing that it's more about the people than the actual operation itself the first 90 days. Don't go in there and try to just implement a new ERP system and think that's going to solve the business and grow that. Go build trust with the superintendents, the foremans, if you're in the HVAC industry, the guys who are out there in the trenches. Build that really good rapport with all those guys, knowing that you're here to take good care of them for the future, because the biggest LTV you should measure is the people on your team.
It's a bit off topic, but you have this whiteboard behind you, and those who don't watch it and listen it, you have written that do the work. So there must be a meaning, what it means to you.
It's surprising how much you can get ahead by just outworking people. And there's a whole dichotomy on working hard and working smart. But I think what thing you want to embed is you really want to be able to go and show the people around you, whether it's executive members, the people below you, that you are putting your blood, sweat, and tears in all the activity that you're doing today in your role. So me as a CEO of the company, I want to hold my team accountable by the standard that I'm putting the work into, right? I'm here in my office at 5 a.m. No one's here today, right? I don't have to be here at 5 a.m. For when they walk in, they see the CEO's here early in the morning doing the work. I set the tone of how I want the work done. And whether you're a janitor at a company or a CEO of a business, if the other people can judge you by the work that you're doing and knowing it's done correctly, you'll be held highly at your peers. And that's ultimately all I care about when running a company.
Okay, back to the portfolio. First acquisition done, first changes made, employment agreements, corporate structures. Did you already look for second acquisition, or what was the timeline there, and how did it all work out?
Yeah, our second one was done 2.5 months later. So we started creating an M&A pipeline therefore after. We bought a really unique company in Utah, actually, that has a lot of traveling crews that come down to Arizona, go down to Colorado as well. Built a lot of good camaraderie with the owner, and he has a really good vested interest in the Pave. And now he's coming on as the VP of operations of the Pave. We're hiring a new CEO at that company. And we just felt this bond instantaneously right when we met with him. So it was a very strategic acquisition for us. That was about $10 million of revenue and about $2.2 million of EBITDA. And they own 6 quarries and asphalt plants. So now we have a lot of density in that market, knowing that we have really good enterprise value within one company, because to have quarries and an asphalt plant is somewhat the holy grail of a paving company. And we want to go have that in our portfolio. So that was our second acquisition, and it's gone fantastically.
When it comes to those deals, again, before all that, you were raising capital, putting together a deal. Did you already build relationships with brokers, or how did it work? And where does the main deal flow coming to you?
Yeah, there's a few ways you can go get deals today. Brokers are a great place to start. So you have to look how brokers are incentivized, right? They want to get deals done. So when you're called to pave, and you're only buying paving companies, and you cold call a bunch of brokers, and you have a really clear thesis on what you're doing, they will be highly incentivized to go work for you. And I basically created a network of 15, 20 brokers saying, hey, I'm Sam, I'm the Pave. I only buy paving companies in the Southwest doing between $1 and $10 million of EBITDA. I will pay you a handsome fee if you find us a good company within our buy box. Do you want to help us? And I got a lot of yeses, right? Again, the more narrow you are, the more deal flow you will get. When you have these wide holding companies that you buy everything under the sun, you're not really in the forefront of anyone's mind. So that's why I really created a narrow thesis, and the brokers were exponentially valuable for that. Investment bankers, same premise. They're just giving a lot larger deal flow to us. And then I actually created something called the Pave Pod. It's not really public to everyone, but this is a really unique strategy to go find companies. Basically, I created a podcast and I ran paid ads on this, saying, attention, all paving owners doing above $5 million revenue. If you qualify for this, come on our pod and talk about how you built your company. Why did I do this? Right? Because if you are above $5 million of revenue, well, you're probably in the ballpark where I do want to talk to you and learn about your business. And then after we start talking about how you built your business and so forth, that's a 30-minute conversation. Let's shut the pod off and say, hey, I'm Sam, I'm the Pave. I actually buy companies in your neck of the woods. We would love to partner with you if there's an opportunity presents itself. This is what we do. Here's our thesis. Let me know if this is of interest to you. And you put someone on a pedestal right away by giving them the opportunity to be on a podcast like you're doing with me right now, rather than calling Susie at the front desk, bothering her at 8 a.m. and saying, hey, I'm Sam. I'm trying to talk to Mick, who owns a paving company, and would love to buy his business. I can tell you that usually does not work, right? So you have to be creative. And that's like one really good secret I just gave away. The second one that's really good is that when you call these off-market companies, there's one question you want to ask, right? And if you want to build rapport over a phone, just like you need 30 seconds to a minute to get to know who you're talking to and say, hey, look, respectfully, I know you're a really busy person. I don't want to waste a lot of time, but I'm doing some diligence in the industry right now in Arizona. And Mick, if you can't do this paving job today, who would you send your business to? And I asked that question specifically because if they're going to say, I sent it to Sam's company down in Glendale, Arizona, I want to know why they're referring that person's company, right? Because obviously it means two things. A, that's a really good company. And B, I need to potentially go buy that company, because a warm referral is the best source of deal flow you could ever get. And I start compiling all this data. And those are the main questions we always ask when doing off-market calls to these businesses, because I want to know who's the best in class in the area, right? And build a platform around them.
Man, this is smart. Thanks for sharing this. Where did you learn this?
There's a lot of tips and tricks you learn from a lot of mistakes. So it's just repetition through a lot of errors, I'll tell you that.
I mean, it's such a so-called boring industry, the paving. What about the owners? Do they do podcast, or they're just talking to you on the phone and you're recording, or how does it all work? Because what I'm guessing is these guys are on the field and they're those very traditional old school business owners.
Yeah, one thing, if you're trying to go enter the Main Street business today, and you're trying to raise capital simultaneously, you're playing a role of understanding how to go talk to blue collar and white collar in the same day. And that is the art of this business, Mick. No, owners will not want to jump on a podcast at all. Like, even though I can go and have a Pave Pod, it's a way to go bait them to get an initial conversation. But ultimately what I do is I get them on the phone, and that's a way to initiate a conversation. And again, you can only get someone's attention span in a very short period of time. So you better be able to gravitate an owner's willingness to talk to you in the first 30 seconds of the conversation, right? Today, all the paving owners that we work with, they know me as, the guy going out there and buying a bunch of paving companies, but I just talk shop with these guys and they love it. I go down there, we joke around, we shoot the shit. They love that. I don't show up like a private equity guy in a vest and a Patagonia shirt at all. They don't want that, right? I show up in boots, a t-shirt, and I talk the paving lingo, right? I give my superintendent shit all the time. You know, we said we're going to have a meeting at 8 a.m. I make a joke saying, why are you at Hooters right now? Not at the meeting. They love that stuff. The banter is what really these guys really care about, knowing that you're human, right? Especially when it's a new owner. They're going to be like, oh, this guy only cares about numbers. This guy only cares about if I get this job done. You need to bifurcate the two and understand this is a people game, right? And a lot of private equity firms get this wrong. And this is where I think I have a large edge over PE firms, and where I think we're creating a lot of influx of demand of M&A in the pipeline today, because PE firms, all they care about is pro formas, LBOs, and then a quarterly report, right? They're not going to go in there and humanize the business with what's currently existent. And I think today that's where the edge we have, and at the Pave, is we're actually going in there and building the highest quality relationship with people. As soon as I get an IOI or LOI out there, I'm like, dude, let me come out and fly out and just have a beer with you, right? And they love that. They're like, you want to come out right now? I want to come out. I want to go sit down, grab a drink with you. Let's talk shop, right? It's not about buying the business. It's more about like getting to know who Mick is, right? And let them to get to know who Sam is. And I promise you, if you just know how to go build long-term relationships with people from the get-go, don't even talk about the business. It's just make them feel a certain way after they're done talking with you. I promise you the business is yours later on.
Yeah, it's so like whatever like things you're saying, it's so easy. You're so focused. You know exactly who you need to talk to. It makes a lot of sense, and I think the smartest thing for others, for myself as well in life, is when it comes to investments and all that, is like get very specific of what do you want to accomplish, what type of industry and all that. This is great.
Nick, I have a quote that I think you would appreciate, and so would the audience, is that confidence is 2 inches wide and 10 feet deep. Fear is a mile wide and an inch deep, right? So if you're going to go dig a hole really deep into a small, narrow facet, you're obviously knowing what direction you're going into. And that builds confidence, right? Because there's a lot of repetition of you just digging in one narrow area. But when you're so wide and you're just like barely making a dent into the ground that you're breaking, you won't create density. And why do people come on podcasts today? Why do people speak on stage? It's because of one thing: they have authority. They're masteries in their craft, right? And if you can go create mastery in a craft by being very specific in what you're really good at, you will go get whatever you want in life. And ultimately, that's the ultimate hack that I think not a lot of people talk about. It's not tweeted enough, people don't tweet about it enough as well. Because holding company on Twitter is like the sexy thing around that everyone throws around, right? I think it's a large distraction, in my opinion, of people talking about these fancy holding companies where they're buying 7 to 10 different type of businesses that have no synergy between them whatsoever. I just don't see the relevance how you can go do that. I understand Warren Buffett did that in more of the public equity space, but if you're going to go buy an HVAC company, a tech company, an equipment rental company all at the same time and thinking you'll create mastery and scale, you're fucking mistaken. Like, you want to go be the best in one domain and be known as the guy. And when you're known as the guy, what will happen? You'll go create deal flow. You'll become really good at that industry and knowledgeable. You'll be known at all the conferences, and you'll have density in a space that is second to none. And that's what we want to go create when going into any thesis today.
You're so deep into this after 2 acquisitions. What were some of the lessons and maybe some of the surprises? And what was you analyzed all this and then you decided to do your 3rd acquisition?
And one thing about paving that is harder than most is that there's working capital issues and there's CapEx issues that you have to be cognizant of. So unlike many other industries, like the light service B2B industries that a lot of people are really keen on, like, we have to go consider that we need to understand what our revenue to CapEx ratio is, which is around 3 to 5% of revenue, and making sure we're adjusting for that, right? So it's having a clear understanding of what your balance sheet looks like at all times and adjusting for that. So I'm very conscious of how we're actually raising capital and then where it's that being deployed, whether that's being deployed for more acquisitions or for more need of CapEx to acquire better talent and do bigger jobs at our existing portfolio companies. I think a lot of people get mistaken as well, that they just want to use every dollar of capital to go do an inorganic M&A approach. I can promise you that won't get you very far in this life cycle. Buying just 2 or 3 companies, even for the next 2-3 years, and taking those companies from $10 million to $30 million is probably even a better approach than just growing through M&A, because you want to show that you've actually created an input to output ratio of your own secret sauce of how you're growing these companies. And that is more prevalent and important to me today than just doing a bunch of M&A. The M&A side I really only focus on today is knowing I'm getting a really good deal and it's creating a synergistic perspective with our current opcos that we have today.
In between buying those businesses, you said in the beginning you raised 2 million, then you raised 7 million. Did you need to raise additional capital to buy company number 3, or how does it all work?
Great question. So as you have like some equity on your balance sheet, there's something called a term loan out there that you can go do. A term loan is a debt instrument that you can go and now leverage across all your companies to start making acquisitions. So you're not diluting yourself, right? If you go raise debt, that is cheaper than equity, right? And now we're doing a term loan to go acquire the next acquisition. So we can now not dilute ourselves whatsoever. We have a strong balance sheet in place. The third company we're buying is, 2.2 of EBITDA and $4.6 million. And that allows us to get proper debt in order to go acquire that company.
How risk averse are you and your team when it comes to using debt now, today and in the future when doing additional acquisitions?
We're pretty risk averse, right? I have a law. It's 2 times leverage over equitize the rest. So I'm not going to go put more than just 2 times of leverage on any company today because you want to leave room for margin, assuring that you don't have to go constrain the business with a lot of debt per every single month. Part of this game of private equity is ideally a lot of guys just completely equitize the deals, just put 100% cash. And then, hopefully on the back end, they can go recapitalize that once to go create, proper equity growth into these businesses. I know a lot of independent sponsors, search funders today, go utilize the SBA up to 90% LTV financing. That's a fine approach. If it's one business and you want to go capitalize on that, but in this model, you have to have room for error because you will make errors. So we don't put a ton of debt on these companies today.
Yesterday I sent you all the information on things I would like to discuss so you could prepare. And you said to me that some things changed when it comes to this large 9-figure ticket, and you said there was a lesson. So could you share this, please?
Yeah, let me share a heartfelt, thing that happened to us recently is I actually went under LOI with a PE firm for $150 million. And I hadn't really shared this in public much. And I got offered a $150 million equity check to grow the Pave to basically almost, we want to take that to $1 billion company, right? So $150 million, using some leverage will get you there over the next 5 years. And what I learned throughout the process of being exclusive for 75 days is you get to know who your capital partner is. And initially when you start your search, you want to create values of who you are as a company and make sure you don't deviate from those values, right? There's certain things that will change, but there's certain things that won't change, Mick. And your values are one of them. And I have a no asphalt policy. And I also have, I have a rule that, Naval talks about is if I don't see myself doing business with you for life, I won't do business with you for a day. And, as I was going down this journey with a PE firm where I was excited to go partner with a group that would, put me in a place that I never thought I could be at the age of 33 of going and building a really big company, which is $1 billion company. I think I got fathomed with the large figures in the valuation, which was outweighing my values, right? And I learned also that, capital is a commodity, but people are not. And as I was going through this diligence process, I started just seeing more red flags from this PE firm that was so misaligned with the values that I set at the very beginning of this company. And on a Sunday evening, very similar to when I figured out the thesis on a Friday afternoon, that really light bulb moment just hit me saying, these are not the right guys for me. And it was shocking to many people on our team for me to go deny that term sheet after being exclusive for 75 days. We were about 13 days from closing. And I had to take a long look in the mirror and saying, are these the people I want to partner with for the next 5 to 7 years? And I was not going to be copacetic with them whatsoever. And I had to go terminate that LOI. So I think the key thing here when you're going out raising large, sums of capital is don't be enamored by some number just from some private equity group. Make sure you have values set of how you want to go build your company, and your capital partner has to be fully aligned with your values. And you'll know that because you have to go see what a really bad partner looks like to know what a really good one looks like as well. And now, we've opened up the floodgates and, we've attracted some of the best capital partners now who are now giving us LOIs that are much more friendlier, much more aligned. And similar to my story about going to the New York company, I had to go find out what a bad company looks like to know what a good company looks like. And it's all part of the learning lesson. People can say that I had 75 days or months of diligence that I lost time on. Absolutely not. This is a better learning lesson than going to Wharton and spending, $75,000 a year, as you don't learn that there. You learn that by going through these real life experiences, Mick. And I wouldn't trade it for the world of what we went through. And then opting out of that LOI was probably one of the best business experiences I've ever done in my entire life.
We haven't talked about good operators, bad operators. So how do you decide whether to replace the founder or keep them on board? And maybe what incentives do you offer when keeping them?
So a lot of these operators today, when they're ready to sell, they're either in a place of they can't grow their company anymore. They just don't have the knowledge or expertise, or they're just ready to retire, one or the other. But ultimately, you have to give them, your assessment of who they are as a person, and knowing do they fit your culture and values as well, if you want them part of your journey for the next 3 to 5 years. And we've gone both ways. So we had one owner that we're parting ways with just because he's not aligned with who the Pave is, and it's totally fine. We have a new operator in place, and then our Utah company is fully aligned, and that company and the operator is going to be with us for the next 5 to 7 years or however long we run the Pave for. I think ultimately what you want to see is what's the life cycle of that individual, and knowing does he have the right mindset, or he or she have the right mindset to go double this company and keep the morale of this business. And if they do have that, and you want to keep an A+ player on your team. And we have this A+ law now, right? I talked about this blank canvas I want to go build. When you're going building something at this scale, there's no room for bringing anyone who's a C player on your team. And if they don't fit that qualification of A+, you got to go optimize for someone else. It doesn't mean it have to be right away, but you have to go put a plan in place instantaneously, knowing that you are going to go replace that person if they don't fit your criteria of excellence.
Now, where are you at the moment? What I mean is when exactly did you start this journey? Doing your research till today? How long has been the journey?
So first acquisition was September 17th, 2024. And then I would say 7 months before that was a lot of digging and research. And then 3 months before the September 17th acquisition, we landed on Paving and then went all in and found the first company.
That's crazy. Has it, obviously you're very excited. So my question, what I mean is, has it been like you expected this to be? Your thesis, has it become true? Now you're in there, you see the stats, you see the information, because you've posted on Twitter, paving companies. Asphalt doesn't go out of style. Roads in America are rated a C today. In a recession, we fix roads. When the economy is booming, we still fix roads. Kamala or Trump, we still fix and pave roads. America's most prevalent is infrastructure are roads. Is it still like this?
It's absolutely still like that. Yeah. I can tell you there's obviously surprises along the way, but I'm very bullish on that thesis. And the way that you know that you're on the right trajectory is who you're attracting. I'm just attracting the best people I've ever attracted in my entire life. I built a medical device company previous to this. I rode the journey by myself, 100% owner of my company. I also attracted great talent. But today I'm building something much bigger, and I'm realizing that I'm just attracting A+ people left and right and having to turn away some people, unfortunately, because I don't have the bandwidth to go bring everyone on. And like I said, the only thing that I can control is the opportunity and the people I bring on. And I know the outcome will be highly advantageous. I can go have those two people, having the people and the opportunity. And right now, the signs are leading the right direction.
If you're taking some time off once in a while, what is this best use of your time? And what should you be doing in order to achieve this? You mentioned 75 to 80 million in EBITDA and this 1 billion revenue.
But I'm taking time off.
When you're taking time off and you're thinking okay, how is my next month, next week, next month, next quarter look like? What is on your to-do list to make sure you accomplish this goal? Because I guess you have this period when you need to exit this what you're building today.
Yeah, a lot of people have to-do lists. I kind of created a to-who list, to be honest, rather than a to-do list. I realize it's not really a how game anymore. It's also bigger a who game. So when I think about how do I go create enterprise value of $75 million of EBITDA and potentially $1 billion of revenue, I think about who's going to get me there. And that's my sole focus today, is attracting the best people around me knowing who have done this, been there, and have experienced that type of revenue to guide us along the way. And during my free time on a long walk with my dog, I always try to find the who's. And I've been pretty good at that thus far. If I have to give myself a pat on the back, I've attracted the biggest people in this industry, both in private equity and the paving space. And I continue to go do so. And that's, the area, the zone of genius, I would say, that I really want to make sure my endeavors are fully locked in on.
What do you know today that you wished you knew before you started? Is there anything?
The pave. The people that you choose to go on a journey with is probably the most important thing when building a company. As you can go have an amazing company and the wrong people, and you can get it all wrong. And there were moments sometimes where I almost hired the wrong person, and I thought they were somewhat cancerous in the very beginning. I saw glimpses of that. And, I have a partner that, is the best sounding board to me as well. And I think I'm the best sounding board to him. And I think the one thing I've learned is that you must have someone that you truly trust at all times throughout the process. Trust is something that compounds better than any investment you ever had in your entire life. And if you know how to go find people you trust from day one, and you see the trust with them from day 1,000, that will be the best investment of your life.
Okay, Sam, I'm so happy that we got to do this in so early phases of your journey. So interesting to see where you are in a year from now, 2 years from now. Last question. I know you're busy, but what is your favorite book?
Favorite book right now? I like the book right now. It's Pitch Anything by Oren Clough. The rationale behind this is I think I'm a sales and psychology guy. Again, mastering myself in private equity. And I love understanding the EQ side of, individuals and knowing what motivates people and how to break people's frame when I have objections. And that book really teaches you how to go do that. And I think the more you can go master that craft, the better you'll become at your game that you're playing. And we're always,
Okay.
Don't forget that. You're always selling. Whether you're a supply chain guy, an engineer, you're always selling. So if you don't know how to sell today, I'd advise you to start learning that.
So if anyone listening want to reach out, maybe sell you something, selling good idea that you should take their capital to buy more paving companies or whatever it could be, where they can find you?
You can reach out to me on LinkedIn. I'm Sam Mahmood, or Twitter as well at @VSamMahmood across all social handles. And then I have my email address. I'm always open as well. It's sam@sammahmood.com.
Okay. Thanks once again for doing this, and talk to you soon.
Thanks, Mick.